If you're a plumber, an electrician, a pipe fitter, or you work in any union or trade, you've probably heard from the bank, your income is hard to prove. My name is Rampersaud. I'm one of the top mortgage brokers in Canada. And today I'm going to explain to you exactly how you can qualify for a mortgage if you're a tradesperson. And when I say qualify, you can qualify even if the bank has said no. So stick around to the end of the video so I can show you how to use your trade income the smart way and stop paying rent so that you can own a home. So the truth about the bank is that they don't like variable income, and that's the type of income you earn. They generally like people that are on a base salary, they're making the same money every 2 weeks, and they're very easy to, and predictable of how much exactly they make. But that's not how trades work. We know that tradespeople are often making way more than the regular Joe at their salary job, and but a lot of times the tradespeople are only claiming a small part of their income. So they may be grossing $180,000 a year in income, but they're only showing a net income of $60,000 or $70,000 a year. So what do I do with that? Banks see this as lower income. I see it as a smart business owner. So here's how I come in. I know how to translate your real earnings exactly into what the bank is looking for. So here's exactly what you need to get approved. Now, it's different in every trade situation. Some people are union workers, some people are hourly workers, some people get huge bonuses, and some people own a corporation. So first, let's talk credit. You need to keep semi-good credit, but some tradespeople often run into problems and have some credit issues. So the reason for this is because they are on that variable income. And when credit issues arise, we need to deal with them quick. So if you want to prepare yourself to get into that mortgage, you want to have usability on your credit cards of 30% or less. And you don't want to miss any payments. Just make sure you make your absolute minimum payments. I've done other videos if you've got crappy credit on how to fix your Equifax and how to fix your TransUnion. Check out the link below the video in order to see that. The next thing is don't finance too many tools. Some tradespeople go crazy. They buy the truck, they buy the trailer, they buy every single tool and they finance those tools. When you finance those tools with companies like Finance It or any of those higher risk companies, they have higher interest rates as well. And with higher interest rates come higher payments. So that makes it so you can qualify for way less. Ideally, you want a credit score of 680 or above. So for you to get the best rates and for to qualify for the highest amount, you need a credit score of 680 above. That's on your Equifax credit bureau. So there are two credit bureaus. There's a TransUnion and then there's the Equifax. I can use both, but the main one that the banks consider is Equifax. The minimum credit score to deal with a regular bank is 600. I can get people approved as low as a 400 credit score. Can you believe it? But they have to put more down. Now let's talk about what's required for a down payment. So we know you got to keep good credit. So if you have really good credit, I can get you a mortgage called Flex Down where you can borrow your down payment. And then I can also get you cash back. So you can borrow a 5% down payment, and then I can get you cash back on that down payment. So you can put very little down and qualify for a mortgage. The actual minimum required through the insurers, CMHC, is 5% down. And for the average trade person, 5% down is all they need to put down. There is a program called the Stated Income Program that will require more down. And the Stated Income Program is essentially where we up your income if you're a business owner. And this would only apply to somebody that owns a corporation and is a tradesperson in a corporation. So basically, you need to put 10% down for the Stated Income Program. And if you have really bad credit and we need to put you through a private lender or a B lender, the minimum down payment is 20% down. If you got that crappy credit, you can still get a mortgage. Trust me, I've done it for thousands of people where they have really, really bad credit and they were still able to qualify for a mortgage because they had a huge down payment. When I say huge, it's 20% or more. You need a broker that understands the trades. The biggest issue of walking into the bank, and the biggest issue that a tradesperson makes, is walking into the bank, because most of those agents don't understand how tradespeople get paid. Banks will look at your income like you're risky, but a good broker will look at your real earning potential. I've helped hundreds, actually thousands of people, roofers, HVAC people, electricians, plumbers, you name it, any type of tradesperson. Not only that, we get lower rates for tradespeople. Some lenders actually have special programs for tradespeople. And if you know who they are, you're going to save some money. So let's talk about the different types of tradespeople. So there's a regular employed tradesperson. That's the electrician that's working for some electrical company and they're getting paid hourly. So they're getting T4s, or they may work for many different electrical companies in a year, or plumbing, or whatever the trade is. Let's just call it trade companies. So basically what the lenders are looking for, if you're in that type of scenario, is they're looking for T4s from you for the last 2 years and recent pay stubs. So one cool thing about this is they average your last 2 years of T4s in order to estimate what your income is. And you could use the current year as well. So this is one of my secret tips that I use, my secret tricks that I use, is we all know that your income is probably increasing year over year. So if, let's say, as of this point in 2025, if you've worked at 4 different companies in 2025, I can use your last pay stub of every one of those companies plus your 2024 T4s and put together a full 2 years worth of income. And if 2025 was higher, or if this current year, whatever the current year is that you're watching this video is, we can use the T4s from that year, or the last pay stubs from that year to up your income. If you're a union employee, I need your T4s plus I need a union letter. Even if you don't and aren't on a current job right now, but you have a union letter, we can still get you approved. Now, the second type of tradesperson is a contract salesperson. So if you're a contract tradesperson, we need the T4s. In this case, it would probably be a T4A. And we need your T1 general. So your last 2 years of T1 generals, so that we can show what your net income is. So there's two things. There's gross income, like I made 200 grand this year. And then there's your net income after all the expenses. They're going to average your last 2 years of net income. So who can qualify for more, the subcontractor or the employee? Well, sometimes the employee can, because they use the gross income for the employee. The subcontractor, they use the net income. So is there savings for being a subcontractor? Uh, Sometimes it is better. Sometimes they make more money. Who knows? But that's the type of documents you need. You also need to prove that you have no taxes owing if you are a subcontract employee. So you're going to have to provide a notice of assessment showing no taxes owing. But you don't need that if you're a T4 employee. You could owe all the taxes. You could owe 100,000 in taxes. They'll still finance you. And finally, the tradesperson that owns a corporation. So this is the owner of the plumbing company, or the owner of the electrical company. So that person is going to have to provide some different documentation. They're going to need all of the incorporation documents, including your articles, your last 2 years of T1 generals, your last 2 years of business financials. Now, there's a major benefit if you own the corporation yourself, and that major benefit is that we can use the stated income product on you. So that means I can essentially up your income to something very reasonable. So for example, if you've got 500,000 in gross revenue, then it's very reasonable that I can give you $200,000 in income, even though you're only claiming 50 grand in income, like a lot of business owners do. So you're saving money on taxes, and I can still get you approved for that high mortgage amount if you own the corporation. What the banks look for is owning the corporation for over 2 years. So 2 years of taxes filed. They're also going to want to know that you have no taxes owing if you own the corporation. Now, that being said, If you haven't owned a corporation for over 2 years, and you've only owned it for 12 months, I can still get you approved, but it would be through a B lender, and the B lenders require 20% down, and we can state your income. So there's some dumb things that tradespeople do a lot of times before they apply for a mortgage, and I want to make sure you don't make the same mistake. And one of those things are buying the $150,000 truck or the trailer right before you apply for a mortgage. Oftentimes, even if you own a corporation and you put it in the company name, your name is still often attached to those kind of loans. So I recommend buying the house or buying the property or buying the shop before you buy any of the toys. If you work with your hands, you deserve your own home, not just build anyone else. Give me a call anytime. My number's in the comments below. Thanks.